Welcome back to the channel, guys. In today's video, I'm going to be comparing VIG versus SCHD. So my current portfolio is at $49,579.26. And with that being said, let's get right into this video. So VIG, the Vanguard Dividend Appreciation Index Fund, is currently sitting at $155.94. In year to date, it's up 2.74%. On the 1 year chart, it's up 14.43%. And then on the 5 year, up 48.59%. Now let's compare that to SCHD, which is currently sitting at $70.32 for the year, down 6.79%. But on the 1 year, it's up only 3.5%. On the 5 year, it's up 39.08%. So it's actually performing worse than VIG in all three categories. Now let's look at their dividend growth charts. So this is VIG. VIG currently has a dividend yield of 2.03%, an annual payout of $3.16, a 5 year growth rate of 9.52%. That is great. That's amazing. That's what you want. And they've been growing their dividend for the past 9 years. Now, if we swap over to SCHD, you can see they have a 3.72% dividend yield, which is higher than VIG, a $2.62 annual payout, which is lower than VIG. However, they have a 5 year growth rate of 13.69%, which is absolutely insane, and dividend growth of 11 years. So those both beat out VIG. So let's look at VIG's fact sheet. So we have some of their investment approach. They seek to track the performance of the S&P US Dividend Growers Index. They're passively managed, full replication. They're fully invested, large cap stocks, and they emphasize stocks with a record of growing their dividend year over year. And they have low expenses to minimize net tracking error. So their expense ratio is 0.06%, which is a really low expense ratio. So next up, we're going to go to the next page, look at their fundamentals. They have 315 stocks, a market cap of $188.9 billion. Current PE sitting at 21.9x. And let's look at their top 10 holdings. They've got Microsoft, Apple, Exxon, United, Health Group, JP Morgan, Johnson & Johnson, Visa, Broadcom, Procter & Gamble, and MasterCard. So these are all well-known brands, amazing companies. So their top 10 is looking really good. Now let's see their exposure. They have industrials at 19.72, technology at 19.2, healthcare at 14.43, financials 13.16, consumer discretionary at 10.81%, consumer staples, basic materials, utilities, telecom, and then energy. So they have a good sector distribution. Then next we'll go over to SCHD's fact sheet. So their goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Straightforward, low-cost fund. They can serve as a part of your core or complementary. They track an index focus on quality and sustainability of dividends. And they invest in stocks selected for fundamental strength relative to peers based on financial ratios. And their total expense ratio is the same as VIG, 0.06%. So overall, with their objectives, they're pretty similar. They both have great objectives and a low expense ratio. So let's just look at some of SCHD's fund details. So they have 104 shares, which is about 1/3 of what VIG has. Then if we go over to their portfolio, look at their top holdings. They have Amgen, AbbVie, Broadcom, Merck, Chevron, Pfizer, Cisco, Texas Instruments, Pepsi, and Verizon. So they do both have Broadcom in their top 10, and they might have another one, but all in all, SCHD does have a great top 10 as well. But I would say I do believe VIG's top 10 is better. although you can't really go wrong with either of the top 10 stocks if you own them individually from both of these ETFs. Now, if we look at their sectors, they have industrials at the top at 18.13, followed by healthcare, 15.6, then financials, 14.54, consumer staples at 13.14, information technology coming in at the fifth place at 12.5%. And then they have energy, consumer discretionary, communication services, materials, and utilities. So I am liking the sector distribution on SCHD, especially the lower weighted technology, because it's just, I mean, technology is usually such a heavy weighting on all ETFs that it's nice to see an ETF that's more diversified just from tech. And I do believe tech is great to have, but I do like having, the other stocks such as the healthcare, the consumer staples, and so on. Next, we're going to do a back test on both of these stocks, starting with $1 million. So we have a portfolio with just VIG, SCHD, and we're going to put VOO to see how they compare against the general stock market. So if we scroll down with our initial balance of 1 million, VOO wins at 4.267 million, followed by SCHD at 3.87 million, and VIG at 3.6 million. So VIG and SCHD, they're not too far apart in their total values. So we have VIG with their best year at 29.62%, SCHD at 32.89%, and VOO at 32.39%. So SCHD wins this one. And next, their worst year, VIG at negative 9.81%, SCHD at negative 5.56%, and VOO at negative 18.19%. So SCHD also wins on the worst year. And if we just look at the chart, you can just see that VIG actually had a pretty big drawdown. And then, of course, VOO at the top with the highest growth. But now let's go to my favorite part, the income. So in 2012, VIG returned $26,000, SCHD 31,000, and VOO 24,000, almost 25,000. So SCHD is in the lead, and it has been in the lead throughout the entire time. But let's just look at last year's income. So in 2022, VIG had $67,181. SCHD had $133,778. VOO had $63,193. So guys, when it comes to overall return, VOO wins. When it comes to dividend income, SCHD absolutely killed it compared to these two stocks, almost double what VIG paid. However, VIG, they did pay more dividends than VOO, but in this case, if I had to choose, I would choose SCHD in this case. And even for the runner-up, second place, I would pick VOO. Now, if I had to pick two stocks, I would still go with the 50-50 SCHD VOO.